Welcome, everyone. We're so delighted you could join us today for a webinar focusing on bridging the gap, how innovative solutions can provide support for financial relief. I'm confident in saying this is going to be the most important Tuesday you spend over the next month here with us, learning more about these innovative solutions. Of course, none of this could be possible without the generosity of our friends and partners at the Mass Mutual Foundation. As we dive into today's session, I really want you to think about all the different ways in which financial shocks impact your life, all the different ways in which financial emergencies pop up and impact the way in which you deal with all the challenges you're facing. In fact, as we get started here, there's a question we want you all to offer input on. In the chat, we're going to drop a link to a Slido app. And in that app, we're going to ask you a very simple question that we'd love for you to fill out, which is, what's your most recent financial emergency? You'll see the app has now been dropped in there. Just click on it, input one word, what your financial emergency is. And we're going to come back to this a little later in the presentation. But to kick us off, I'm privileged to welcome our friend Ali Matthias from the Mass Mutual Foundation.
Thank you so much, Matt. We really appreciate being here. Thanks for hosting us. And we really appreciate everybody who's joined us today. It's forums like these that have really informed so much of the work that we do at the Mass Mutual Foundation to help build financial resilience of our communities. And, at the Mass Mutual Foundation, our focus is at the intersection of social and financial capital. And we support proven solutions as well as seed promising ideas and really aim to help our community partners amplify their impact or scale their approach, examples of which you'll hear about today. And we're here today. Why are we here today? Because we acknowledge that there can be outsized consequences of even a small financial shock, especially for the 1 in 3 among us who are really unable to meet that unexpected emergency. We can all relate to these types of experiences. So, your car battery dies and it costs $200 to replace. Without any savings, you're faced with choosing between something like paying the electric bill and being able to get to work. Or you have an infant whose 104 fever won't go down. You get to the emergency room and the visit bill is $2,500. Even if you have health insurance, the copay can set you back several hundred. The refrigerator stops working. This is my example that I would put into Slido right now. Refrigerator stops working and it costs $100 just to get someone out to look at it, let alone fix it. And so you have to then decide, how important is it to keep fresh produce in the house to feed your family? These unexpected expenses really aren't all even just about making repairs or addressing health concerns. It's also about our ability to take advantage of opportunities. If you're underemployed and you're accepted into a job training program so you can really get on the path to a career wage, but you're required to have the work boots or the uniform or the equipment in order to participate. Where do you even come up with those funds? So at the Mass Mutual Foundation, we know from listening to our nonprofit partners how important access to these kinds of just-in-time resources are for their clients, as well as for that nonprofit's ability to achieve their mission. But the avenues and the options for the most vulnerable to receive the immediate financial assistance are really few. So when we find and what is actually available out there isn't always designed to easily and, more importantly, quickly or affordably offer support. So when we find a solution that changes the game, we want to grow it and we want to share it. So today we really look forward to highlighting some resonant learnings and partnerships that have gained traction in our communities. And we're hopeful that today's conversation will inform or inspire your work as we all seek to promote financial stability and enhance overall well-being. So Matt, I'll turn it back to you to get us started in the conversation.
Wonderful. Thank you, Ali. And again, thanks again to the Mass Mutual Foundation for all the work you do to inspire financial health for the communities you support. I'd like to bring to the screen or the stage two of my friends and colleagues. I'm privileged to be joined by Kelly Krebs, who's the Executive Director at NeighborShare, and also Rachel Schneider, who is the founder and CEO at Canary. Welcome both. Kelly, I want to start with you. What brought you to this work? What inspired you to take on this type of challenge?
Yeah, great question, Matt. So I think for us, it's twofold. What brought NeighborShare into being and into this work, and then what brought me personally into the work. So NeighborShare is a few years old now. We were founded during the pandemic, and what really brought us to the work was recognition mid-pandemic but also knowing that this is an ongoing issue, that there's not a consistent mechanism in this country to both identify households when they're in what we call pivotal moments of need, the needs that Ali just did such a beautiful job of describing. There's not only a way to not identify them in real time, but then to actually get them the resources they need with as little red tape as possible. And so that's what the impetus of NeighborShare was. That's what brought us into being. I personally came to NeighborShare 2 years ago from a career in the nonprofit sector. And what really appealed to me about what NeighborShare was building was two things. One, having seen that gap through the years, having gotten to work a lot at particularly this systems level change sort of space, but recognizing that there are still so many families slipping through the cracks every day because we aren't able to sort of recognize and catch them in those moments of need. And then the other piece of NeighborShare's model, which we'll get to in a few minutes, is the donor side and how we connect those needs to neighbors who want to help. And really recognizing that next generation donors want very direct and transparent ways to lend a hand, to direct their charitable dollars and so forth. And so having recognized both of those gaps in the system, joining NeighborShare and helping push this work forward was a bit of a no-brainer for me.
Yeah, thank you for sharing that. Rachel, same question for you. What brought you to this work?
Yeah, so I always have a hard time with that question. Like, big picture, what brought me to this work is that I just was born with a real, or raised with a real understanding that I had won the lottery of birth, right? Like, my life has had a reasonable amount of ease, right? Middle class parents, middle class neighborhood, good schools, the works, right? And so I've devoted a lot of my professional life to trying to make that the case for more people, right? And I'm very lucky that I got to spend about a decade at the Financial Health Network and working on these issues really closely and working on understanding. I was responsible for research, so I was really responsible for understanding what are the challenges that lower income families have, and had the great pleasure and honor of doing a project called the U.S. Financial Diaries. And that work just enabled me to sit in a lot of rooms with people who were struggling and made it really clear that this issue of, and lots of people in the Financial Health Network community are working on this issue of people have, they might be able to break even sort of over a longer period of time, maybe even over a year, maybe even over 6 months, they're breaking even. But today, they don't have the money they need for what is going to happen tomorrow. And I became really passionate about the idea that one of the solutions to that issue was understudied, under-resourced, and that's just giving people that money. Just like we have, billions of dollars being donated every day, every year in our society. People are very generous. So how do we direct more of that generosity to those moments when people don't have enough? Became a real passion for me, and that's my story, Mary.
Yeah, I'm always struck by the simplicity of the vision for both you and
Like
Kelly, which is sometimes people just need the thing. And how do we
sometimes people
best
just need
get
money.
them the thing? And we don't have to overcomplicate it with models and all this other stuff. It's really just focused on what people need in order to navigate their lives. Just a quick reminder to our audience, please click on the Slido link to input your most recent financial emergency. And the Q&A function in the Zoom is a place where you can drop your questions, as we do plan to take questions throughout and at the end of this session. Rachel, want to stay with you. What exactly does Canary do? How does it work? And how does your solution help solve this problem?
Yeah, so what Canary does is we work with employers to establish a charitable relief fund for their employees. So it really is that simple idea that a workplace is a community of people, fundamentally. And it's a community of people that is often socioeconomically diverse and that sees each other every day and is in each other's lives. And it's a community where often when somebody struggles, in fact, people do step up. They pass the hat, they send gifts, they know something, they figure out how to do a pay advance, they figure out how to, help in some way, they give extra days off. And so what Canary does is we make sort of a formal, professional, like efficient way for a company to set up a charitable fund where people can donate dollars into that fund. And then anybody who works at that company who experiences a crisis can come and request help. And we facilitate, evaluating an application against eligibility criteria and move money to that individual if they meet the criteria. So really, again, it's very straightforward. Like, let's raise money from people and then give it to other people.
Yeah. Yeah, I love that. Kelly, talk us through how NeighborShare works and how you're all helping address these challenges for communities and individuals.
Yeah, similarly, we are about people helping people and the simple solution. And so our founders were actually a team of financial services folks. It was early pandemic, like I said, sort of looking around and seeing this gap in the system of how we sort of identify folks in these moments of need. At the same time, they were talking to direct service nonprofits across the country, getting the sort of landscape and lay of the land, and realizing that these nonprofits, youth programs, shelters, domestic violence support, you name it, are actually identifying these moments every day and often themselves don't have the resources to meet it, either because it's out of scope for them or because any financial sort of emergency funds they may have are already dried up. Community resources may be lean or have dried up and so forth. And so realizing that these folks who are already trusted and working on the ground are really a conduit for sourcing and helping fulfill these moments of need for families. And then similarly, at the same time, looking around mid-pandemic and really seeing the rise of mutual aid. And Rachel described it so well, like people helping people, pass the hat, Venmo each other for bills, however you want to describe it. It really became clear to us that most people would lend a hand to a neighbor in need if they knew when their neighbor was going through a tough spot. And so how do we actually make that easy for people? How do we create a trusted place for the everyday American to kind of come and lend a hand to a neighbor in need? And so the simplicity of the model that was created is, again, what drew me to it. We're going to partner with these direct service organizations that are already on the ground, deeply trusted and rooted in communities. They're going to source these moments of need, pop them onto the NeighborShare platform, and our community of donors is meeting that need today within 14 days. And so essentially like making that match, taking that moment of need, matching it to a neighbor or a donor, a corporate partner who wants to help, and meeting the need with as little red tape as possible.
Yeah. I mean, one of the things I appreciate about both your solution and Canary solution is how it really brings the human forward. And, I think many of us have probably read Roger Putnam's Bowling Alone and some of the sense of isolation one can feel. And I think that isolation is exacerbated when you feel like you have no path forward or you're in that financial strain. And this community-based model that both you and Rachel using through different vectors, through different mechanisms, seems to be about giving people an opportunity to help people. And I find that that's always an enticing thing. I want to bring up the Slido poll because this is going to be relevant to our next question. So we weren't just sourcing your emergencies for our amusement. We were actually curious as to how these were showing up. Going to stay with you, Kelly. As you see here, you see lots of car repair, some medical, hiring a lawyer. We'll put that one to maybe a sidebar chat. Definitely a interesting, but nonetheless an emergency, right? Something that comes up. What are some of the things that you're seeing with your program? What are some of the more common emergencies you all are helping folks solve for?
Yeah, so we have, as you can imagine, about actually 9 discrete buckets that we see needs come through in. The top need always, it's never changed for us in our 3.5 years of existence, is housing. About a quarter of the needs that come through we see are housing related. We may be helping somebody meet their rent payment for a month. We may be paying a security deposit for somebody to move into a new home. The needs sort of run the gamut, but for us, it's about helping somebody either get or maintain stable housing. That's really how I'd sort of sum it up, and about a quarter of our requests that come through are for that. Right behind that, we see utility bills at 19%, transportation around 13%. You see car repair here. We see that a lot. There's no car repair fund out there. Grocery and food is 12%, and then a lot of the other sort of change places down, but furnishings, childcare, education, medical, you name it, we kind of see it all. I think Rachel and the Canary team are a little bit further along than we are in terms of the sophistication of their data collection, so she'll probably talk about this in a minute. But for us, one of the things we're evolving is the way we collect some of this data. And so right now, we are simply collecting the data on the need itself and what we're fulfilling. But what we're really finding is that doesn't tell the whole story in terms of what we call the precipitating event. And so, for example, and again, Allie painted some nice illustrations of this early on. you might get that medical diagnosis, and all of a sudden your prescription is this unexpected expense, and so you're sort of robbing Peter to pay Paul, and so you're using your rent money to pay for this prescription, but then the neighbor share request that comes through is for rent. And so you know, those numbers for us right now are about the need met, but we're evolving the way that we collect that data to be a little richer in terms of understanding more of the precipitating event as well.
Yeah, Rachel, how about you? What are you seeing at Canary in terms of what's driving some of the needs for these funds?
Yeah, really the same. And I think it's nice of you to say that, Kelly, but I'm not sure we're that much ahead of you because of the complexity of exactly what you described. I mean, that is the nature of people's lives. Like, is the rent the crisis or the precipitating event the crisis? Unclear. But so we see a lot of medical, right? So the three biggest event categories that we see people requesting help for are really medical related, car related, and housing related. We've seen a really dramatic increase in requests that are connected to eviction, right? So the housing crisis is showing up in our data in a really material way. And then sort of the next category of things down that we see are a death in the family or something natural disaster related. We do a lot of disaster related work, and a hurricane or a wildfire is a really strong motivator for a company to work with Canary, and a really good and relevant use case. And I maybe should have mentioned the work we do is all sort of governed by some IRS rules around what employers can and can't do when they're giving charitable gifts to individuals. And the rules around natural disasters are particularly clear. And so that's, you know, it's unsurprising that we'd see a lot of that in our populations. That's a really big motivator. But also, you know, that's the nature of climate change. So we are going to see a lot more people where the precipitating event was a major weather event.
Yeah, and I think we've seen two really salient examples of that just in the last few weeks with the hurricanes in North Carolina and Florida.
Yeah,
the devastation it's wrought.
Yeah, we had our biggest week ever in giving out grants 2 weeks ago, largely hurricane related.
Yeah. I also really admire the recognition that while the car repair may be the thing that is being paid for, there may be precipitating events. And I think oftentimes we look at those precipitating events, perhaps in isolation, even in that context, right? It's this happened, then this happened, then this happened. But I wonder if there's a larger frame here that maybe helps us also contextualize this. And in fact, we just published a few weeks ago a new brief under our Frontier series looking at household financial health, particularly for those in the middle class. And one of the things that our analysis has shown, and this has been replicated by others as well, is that between 1990 and 2019, the median family's income grew by about 140%. But the cost of childcare grew more than 200%. Prescription drugs, about 175%. Higher education, almost 400%. That's to say nothing of the ongoing housing crisis that both you and Kelly have underscored here. So what might these skyrocketing costs for essentials tell us and how they're helping to create more emergencies? Or are you seeing that in your data? Are we seeing these more macro trends impacting what's happening in people's lives? And Kelly, maybe start with you.
Yeah, I mean, I think you hit the nail on the head, Matt. This is the biggest challenge that we have. And we see this play out in the types of financial needs that are fulfilled every day. The majority of our needs are what we typically call basic needs, the kind of what we talked about: housing, utilities, food, and transportation. Our support is critical to households because we do bridge that gap that now exists for so many between income and unexpected expenses. Not to stay on the housing example, but we just launched a pilot in Boston where most households are spending more than 30% of their income on housing, which is not sustainable. With that level of housing cost burden, plus the cost increases you mentioned, families have literally nothing left over to weather even the smallest of financial storms. And then the other thing that I think we're just now starting to grapple with is like rising costs also mean the cost of the emergency itself is higher now than it used to be. And so whereas you could maybe get a particular car repair for $200 or $300 a few years ago, that's now significantly higher. And so it's like both the cost of everyday living is going up, but so are the costs of these financial shocks. And it's just a double whammy for a lot of families.
Yeah, Rachel, what would you add to that?
I mean, it's mind-boggling so much. So for one thing, I think we, just as an aside, need to point out that much of the macroeconomic data is good, and yet the average American is still very worried about the economy. And this is why, right? This is why. And it doesn't show up in most of our data and our macro data. And so that's why the Financial Health Network's work here is so crucial. The other thing to say, though, is that in addition to prices, to the cost of living really growing far faster than wages, we've also had a decline over that same period in the sorts of communal support systems that are available to meet those needs, right? So the apocryphal example is we used to do defined benefit pensions. Now we do defined contribution, right? So we've shifted the responsibility of saving for your retirement from the employer to the individual. There's a whole host of other examples. Health insurance very much is that way, where the employer contribution to premiums has declined relative to the employee contribution to premiums, right? So there are all these ways in which we're expecting individuals to be able to manage their own financial lives, and at the same time making it harder and harder for them to do so. And so part of my other passion around Canary and like why I get so excited about NeighborShare is we do need as many solutions as possible to acknowledge that we have to shift and think more about spreading risk across a group of people versus having any individual family be responsible for their whole financial life, which is just really, really challenging. I don't know. That's what that data makes me think about it.
Yeah.
And it's a really hard societal problem, but it's also very much solvable, right? Like I think NeighborShare is a really great example. I think Canary is doing our part. We're not the only ones out there.
And
Yeah.
like Rachel said, there's a bigger ecosystem out there. We are one solution in that ecosystem. And so what is the policy change that needs to be happening at a bigger level? What are the larger sort of macro level solutions? And then how are we sort of filling the gap and catching these families that are still slipping through that ecosystem? And so we've got to really strengthen the whole thing.
Yeah. Yeah. And I think the thing, certainly Canary working through the workplace channel, I mean, the vast majority of folks get access to financial health benefits through their workplace. And so that makes a lot of sense. A lot of folks rely on their community and their neighbors to weather these storms. And so to me, it's also about the hopefulness of the solutions that both Canary and NeighborShare is providing, which is really rooting them in the reality of people's lives, not ignoring the challenges, but also not coming saying, here's the fix to all of these very complex problems. Here's a discrete thing you can do to help alleviate this pain for your community, for your workforce, et cetera. And I think that's a really inspiring message as we think about bringing forward, different types of solutions. And I just go back, I'm just so enamored by this notion of people want to help other people. That has always been a case, and formalizing that apparatus makes a lot of sense. We've also seen increasingly surveys, anecdote reports that suggest to us that emergencies are not really that rare. In other words, we see for example, one survey from Lending Club last year found that any 90-day period, about 46% of the US population experiences some form of financial emergency. And some folks experience multiple within that period of time. And so is emergency even the right way to think about this? I mean, it seems to me that something that's likely to happen to you annually doesn't strike me as an emergency, but more as a sort of the persistent toll of financial shocks that individuals are going to face. How do you all think about the emergency versus this is something that we should be planning for intentionally because it's inevitable? Maybe start with you, Rachel.
The English language doesn't really have a good word for this. We really struggled with this, like both in the framing of what Canary does back when we were writing, when I was more of a writer and researcher around this. Emergency sounds occasional to people, but we just don't have a good language. Like, what do you say? Like we sometimes talk about unpredictable, unavoidable, but if you have a crappy car, it is entirely predictable that it will in fact break down, right? So it's not, I think it's really a struggle. And so, ultimately, I mean, even though we have to probably stick with the word emergency because we don't have another good option. Like one of the researchers who I used to pay attention to on this, talked about the usefully large lump sum It's kind of a mouthful, but like that's what people need is they often need a usefully large lump sum. But it is going to be the case that they will need that lump sum often, but not at a regular cadence.
Yeah.
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 I think that's right. We've similarly struggled with the language. And also because we don't, and Allie again did a great job of describing this on the front end, we don't just meet emergency financial needs, we sort of meet what we call last mile blockers as well. So she gave the great example of somebody starting the construction job and can't afford the steel-toed boots, somebody who gets accepted to a nursing scholarship but can't afford the books. So it's both like these perpetual emergencies that are happening and these last mile blockers. And so the best word we've come up with is pivotal. That's usually the word we use the most, that they're these pivotal moments of need that, if not otherwise met, can create a crisis spiral that can frankly take years to dig out of. But I think you're exactly right, Matt. Like, we're seeing these repeated sort of requests come through. I will say to some extent, though, it does depend on the population. Obviously, here today, we're talking about lower income families, those who have been recently unhoused or jobless. And so we do see perpetual sort of financial shocks coming through. And we try to set up our model for that. We do ask that neighbor share funds not be used for consistent like monthly income supplements, but we would be naive to think that these financial shocks come in ones or, just come once a year. And so we do leave it up to our discretion, our partner's discretion on if they meet, one household's need this month, another maybe 2 months from now, and so forth. But it does depend on the population. We also serve higher income families that are similarly affected by these financial shocks and still, for whatever reason, may not have savings. And so we sort of run the gamut. We don't have eligibility requirements because financial shocks don't discriminate. And so we're, constantly trying to navigate, I think, all of this and how we meet people where they are.
Yeah. It was interesting. During the height of the pandemic, one of the partners we work with at a large employer had a hardship fund that had a lot of requirements and, fairly narrow, and they took the guardrails off it during the pandemic. And one of the learnings that they actually had was, and they haven't put those guardrails back on, they've kept it and broadened it and maintained its openness. And one of the learnings that they had from that was they had put those guardrails in out of an abundance of caution that, geez, we don't want people to abuse it. And what they found is they saw no difference in potential abuse, because at the end of the day, most people come to these funds because they are in despair and they need access to the resources. And artificially creating some of those barriers can reduce the impact of those, because people may just opt out and then turn to a payday lender or turn to something that's not going to be advantageous to them. We had a question that came up in the chat. I think this is sort of a good spot to do this, which is, we're talking about two types of, for lack of a better phrase, like sort of short-term liquidity, right? Access to funds in the near term. We had a question here around small dollar lending. And maybe I'll start with you, Rachel, and then Kelly, welcome your thoughts as well, which is, where do you see small dollar, non-predatory, they were clear in the question, non-predatory small dollar lending for mainstream and financial institutions as nonprofits? Where does it fit into this ecosystem? Like, where do you see that as being part of this? And do you see it specifically as a tandem solution, an independent solution? How do you see small dollar credit factoring in here?
I think that it's not, and I'd expand it. I'd say small dollar credit, emergency savings, financial advice, and access to emergency grants all fit together really beautifully. And ideally, you'd think about it as a financial aid package, as a financial plan over the course of your life, where you would be using all of those tools. I just don't think they're replacements for each other. So it is the case that for many people, even if they can't afford the money, they can't afford the event now, the loan isn't going to help them, even if it's a great high quality loan. Because they are, in fact, just not going to have the money in the future. That is the case for some folks, and that's where a grant is really the best answer. But it's not a complete answer, because the funds are always going to be limited. Like we're never going to have the amount of grant dollars that we want to meet everybody's need. And so in my ideal world, somebody would get some part of this. I think of a financial aid package, like some grants, some loans, some you saved yourself, some you borrowed from, a family member helped you, and that's how you cobble together your response to this larger crisis.
Yeah. Kelly, what would you add to that?
No, I think that's right. I think Rachel said it beautifully. I mean, there are so many great organizations doing similar work. Kiva is one that comes to mind that really does, I think, beautiful job in this sort of more loan space. For us, when we think about grants, it really is a little bit more of that immediate need, like Rachel said, that immediate liquidity. Like our goal is to remove the red tape. And so whereas even a quality loan can take a little bit of time. And so where are those moments that we can inject just in time? That's what we're trying to do, but it is and should be part of that larger patchwork. And so that's why it's so critical that we all continue to collaborate with each other and figure out how to sort of like wrap around these households and families.
Yeah, I want to emphasize that point about speed. I mean, in the case of a natural disaster, as an example, FEMA affirmatively does not view itself as a first responder, right? Like if you are going to get money from FEMA, you are going to get it months from now. And you've had a crisis today. Like you're staying in a hotel because your house was flooded today. And that was really one of the origin stories of emergency relief fund for employers, was that employers knew that they had people who like needed gas money in order to evacuate. And you just can't solve that with a loan. It really needs to, and I also think that's a much different cultural expectation or a much different social statement that you're making when you say, we are a community, we're going to help you. It's a very different announcement from the CEO than we are a community, we're going to enable you to borrow. It's just not the same. And they both have need, like value, right? But they fit a different role in our community life.
Yeah. I also think that if you were just to ask consumers about which they would prefer, I don't think they'd be looking for debt to solve a debt problem as the means to do that. And that's not to diminish the role of small dollar credit. It's hugely important, can be a really good belt and suspender approach. But I think it's, just logically, if people can get access to the cash and a no strings attached cash sort of grant, that's obviously going to be preferential. But to your point, Rachel, it may be insufficient to cover the frequency, the size, the gaps. And so those solutions certainly have their place and are important bulwarks, especially if they can be alternatives to what is just more predatory options that exist in the market today that ensnare people in more vicious cycles. Kelly, I want to come back to you as we advance our conversation here. But what are some of the unexpected or unintended outcomes that you've witnessed or that have emerged since you've launched NeighborShare?
Yeah, this is probably not the most exciting answer, but as you have gathered, the NeighborShare model is really contingent on neighbors helping neighbors. And so I think the overall assumption and overwhelming assumption when we first started is that would be typically how we meet these needs, as neighbor to neighbor. But as with any startup, we quickly learned that both attracting individual neighborly support to the site is both slow and expensive to build sort of brick by brick, especially at these lower dollar amounts. And so we made this strategic decision a couple of years ago to take a swing at building a base of revenue and support through more of institutional partnerships, often with corporates or foundations. And I think I was pleasantly surprised at how cool the reception was, that it's not just individual donors who want direct and transparent ways to help their neighbors. Everyone wants that. And so we have two primary pitches for our corporate partners, sort of this idea of adopting a need. And so shout out to Hertz, for example, who backstops all the transportation related needs on the site if they're not met neighbor to neighbor. We pay those from Hertz's corporate gift. Similarly, the Mass Mutual Foundation sort of took our other approach, which is adopting your backyard, adopting a specific geography and helping to backfill those needs. And so we've been really pleasantly surprised by the institutional support and the excitement for what we're building. And at the end of the day, one of our differentiators is that whether you're an individual donor or an institutional donor, we're putting into your hands a complete index of every single household that your dollars went to help, and their story and their family makeup and their location. And I got to deliver that just a couple of weeks ago to one of our medical health sponsors. And he just sat there speechless. I mean, he's just paging through story after story and like, we've got to print this out for everybody who works in the company. Like they're going to be so proud of what we've contributed to and how we've been able to make such a direct impact on so many households. And so for us, it's really been like expanding the idea of what a neighbor is. Like, yeah, a neighbor is a neighbor, but a neighbor is also an institutional partner, and a neighbor is also that coffee shop down the street who may want to just put our QR code in their checkout experience or whatever it may be. To your earlier point, Matt, like people want to help, and it doesn't matter sort of what setting you're in, we're finding ways to connect with them there. So that's been really cool to sort of build out and see happen.
Yeah. Rachel, slightly different question for you here on this one, which is, what are some of the ways you think about collaboration and partnership for expanding the reach of your work?
I mean, I love that question. I wish that we had more time to spend on partnership and collaboration. We are often heads down in working with our employer partners, responding to existing grant requests. But I think your earlier question around small dollar credit that we got from one of the audience members is a big piece of it. Like we would like to offer Canary alongside and in partnership with a wide range of other financial supports. And we're seeing more and more of our client base be interested in that and want to talk about how to connect what we're doing with whatever emergency savings program they put in place or whatever advice program they put in place. So that's really exciting. And then the other direction is Kelly and I started talking, and I think there's a community of us who are working on cash grants who could do more to raise up this solution and also help people understand how it fits and collect more data that advances the cause. You know, there was a lot of field building work done around UBI, around the giving people a regular monthly cash infusion. And I think that we're a neighbor to that conversation, but it's not exactly the same conversation. And people don't necessarily connect one with the other, and we fit different needs. So I think there's a lot we could do there. And a related point there is some of the questions you've asked on this call, we don't have as good of data as we'd like to have, right? So what is the size of the average shock that people experience? How often do those shocks show up? What do they do in the absence of a neighbor share or a canary? All of those are really important research questions that we would love to be a partner with folks trying to answer.
Yeah, Kelly, you gave the great example of like a partnership with Hertz, for example. What are some of the other ways you think about partnerships and collaborations to expand your reach?
Yeah, I think for us, at least today and where we are in our startup trajectory, that's the big one for us. But as Rachel said, there's a lot of field building to be done here. And so this could take us down a whole different sort of track in this conversation. But one of the reasons direct cash hasn't caught on in the US in the way it has internationally is because, and not to pile on the IRS as everybody likes to do, but some of the IRS restrictions to direct cash and so nonprofits sort of most of the time don't want to touch it versus like actually trying to tackle this and figure out how we do a better job of it. And so that's just another example of that. Like, I think there's some systemic barriers to this that we've unintentionally created, like in the US, and a little bit of collaboration and field building sort of across the breadth of folks who are working on this could really crack through some of that in a much faster way than any of us could do individually.
Yeah. In other words, the tax code should work for people's lives in ways that it functions. It's a novel idea. It's a novel idea, potentially radical. We've got one more question for our panelists, and then we do have a number of questions in our Q&A that we want to make sure we give air to. But same question for both of you, and maybe Kelly, start with you. But what's next? What are you looking forward to, or what are you looking a year out from now? What's next on your horizon?
We are growing. We want to impact not just the number of neighbors we're serving with direct cash, but the number of neighbors engaged in the process. To us, that number is just important on both sides of sort of the model. And so we're actually growing in an interesting way. I was telling Rachel when we were chatting actually about some of this yesterday. I think NeighborShare started a bit in reverse of what some organizations do, where typically you'll see someone start small, kind of prove out a model in a specific geographic area or in a specific way, and then scale out from there. We started broad. When I came on in 2022, we had 68 nonprofit partners sourcing needs across 26 states. And that was really amazing for us. That allowed us to attract some of these national partnerships and so forth. What it didn't allow us to do, though, and hasn't allowed us to really fully test, is how do you acquire that individual neighborly support, which is much more easily done in a hyper-local way. And so with the Mass Mutual Foundation support, we're actually building out our first true like hyper local approach here in the greater Boston area. We're about to announce our first tranche of official Boston nonprofit partners who will help us source and fulfill these needs. And we'll now have the opportunity to figure out how we build out this more local ecosystem. Our theory here is we're starting to position more geographies to follow, is that's actually how we scale, that we sort of write this roadmap for this local implementation, and then we can kind of replicate that community by community to really start to reach more neighbors. And so we're really excited about what we're doing. Love to bring anybody who wants to chat into the fold, and just really believe again in the power of people helping people.
Yeah, thank you, Kelly. How about you, Rachel? What's next for the year for you and the Canary team?
It's really connected to your last question, so it's three things. It's like keeping our heads down and just talking to as many employers as we can to encourage them to do this work and to make it really easy for them to do this work. It's spending time on partnerships with other financial health providers so that we can provide as holistic of an answer for employees as possible. And it's spending time with Kelly and others on the research and collaborative work that would make this overall solution of cash to people when they need it a more common answer higher in people's heads when they're thinking about what we need to do to solve for financial health. And at every step of this work, it's been gratifying and I don't know, it's really been amazing to me to see the extent to which this has only been possible because of support and interest and engagement from other people, right? So Canary's early days, like we wouldn't have been able to explore this idea without the support of a bunch of folks who are on this call. I think like we had support from Citi, we had support from BlackRock, we had support from the Meteor Network, we had support from the Robin Hood Foundation. Like all of that was crucial. Financial health networks support and advice and guidance and interest in our work has been crucial along the way as well. So I am really focused on in the next year how I can continue to foster and appreciate the network of people who make this work at all viable.
Yeah.
It's really, I like my professional life. I had a lot of time as an individual contributor, right? And this is not that. Like this is like, who could I talk to and who wants to be involved in advancing these ideas? And it's really fun.
Yeah. I mean, financial health is a team sport. I think that goes without saying. And one of the things I love about both of your answers is neither of you said, well, it's about us, out competing and, becoming no, we have to do this in partnership. We have to do this together. We have to do this with a different range of stakeholders. And I think from Financial Health Network's perspective, that's really the power of building a network like the FHN network and working with great partners like the Mass Mutual Foundation and both of your organizations. Is I'm sure there are people in the audience who have already making some connections, and we'll certainly share contact information for both of you at the end of this. But this is just one of those additional stepping stones towards creating a broader financial health ecosystem, one that puts people at the center, that allows consumers, employees, et cetera, to navigate their lives with just a little more ease and comfort. Not solving all of their problems, but solving some of the big ones that they face. We've got some great questions in the Q&A. And so maybe start with you, Kelly, and then Rachel, welcome your perspective. But question comes in here, which is folks who receive financial assistance and then donate that assistance to someone else's emergency expense. How common is that? And I could imagine it happening for my child, for example, would be an easy example, but I'm not sure that's exactly the example this question's trying to get at.
This is something I've actually been following for my career. I mentioned earlier, I've spent my career in this sector and have often, the research is overwhelming that folks who have received assistance at one point in their life almost always pay it forward in some way, shape, or form. We're not formally collecting that data right now on the front end of the neighbor share experience, but we know that to be true. We also know relatedly that low income folks or middle class folks give more per capita toward different causes and so forth. And so there's definitely something to be said for being closer to the experience and sort of that mindset of generosity and sort of paying it forward. So We think about that in the evolution of our model. You know, as I mentioned, we're still 3 years old, so figuring out different ways to continue to grow and make the model a little stickier for folks. And we anticipate that'll be a portion of what we think about moving forward, but definitely something to keep in mind.
Yeah. How about you, Rachel? Are you seeing folks that are applying for grants and then using those grants to support other folks in their life?
Well, we absolutely are. Like, the reality is that money is communal. It's not an individual. It's also a team sport. Like it just is. But we're also seeing plenty of people who received grants. Like we had one person, they received a grant, and then they signed up for recurring payroll donations to be able to contribute money. And we got a note from them that said they were going to give money until they had funded enough, until they had donated enough to fund one grant for one other person, right? That's not uncommon for us, where somebody really feels like, I had this amazing help that I received and I want to be able to also give help. And the reality is that at many of the companies we work with, if everyone on the payroll gave small amounts of money regularly, that would make this sustainable for the company. And so we have some companies who are working hard to embed that behavior and that belief into their implementation with Canary.
Yeah. Just sticking with Canary for a minute. What percentage of the funds are you saying coming from the employers versus employees' contributions? And what are the different ways in which both can make contributions?
Yeah. So in spite of what I just said, 80% of the money is still coming from employers.
Yeah.
I probably need to update that data, but that's what it was last time I looked. And I'm of two minds about that. I could argue, so employers have obviously the biggest check writing abilities. And so we want to see them putting money in. And we want to see them saying, making the financial commitment that goes with their verbal, right? Like companies will say, we're all in it together. Like we have your back. We want to give them a way to make that really tangible. And an emergency fund is one. So we want to encourage them to continue writing checks. But they also have the power of the megaphone. And so, seeing a CEO stand in front of a room and say, we really are in it together, and this is how you can participate, is also, I think, really important.
Yeah.
That fully answers your question. But yeah, we want to see both.
Yeah. And I know that some organizations, I'm not saying it's for Canary, but have like PTO donation programs and other ways in which to make contributions to their coworkers.
Exactly. Yep, and that's really valuable. So we see, so there's absolutely a way for companies to connect their PTO donation programs into their employee relief program. So you could have an employee contribute PTO, have it show up as cash in your employee relief fund. I think we will see a lot more of that over the coming years. And we also see a lot of local fundraising activities. So we have a client where they're manufacturers, they have manufacturing plants, and they'll run fundraising drives at one manufacturing plant and have it as a competition with another one. Like it's just, this can be a really fun and joyful part of your culture. It's how do we build the muscle of helping each other in ways that are growthful and engaging in other ways too.
Yeah. Yeah. Another question that came in, and this is specific to the awards or the grants that both organizations making. Is there an underwriting process? And how are you thinking about how to apportion these funds to a larger set of folks in the communities who also have needs? In other words, how do you prioritize in the underwriting criteria? Maybe start with you, Kelly.
Yeah, so we first and foremost subscribe to the overall sort of concept of direct cash assistance, which is low barrier. We trust you. The research shows you're going to do what is intended with the cash. That said, where we feel like we inject a bit of trust and credibility into the process is through our partnerships with these direct service organizations. And so folks who are on our platform, these local organizations who are sourcing the needs, we vet them as an organization on the front end. So we go through sort of a series of steps and interviews with them. They're onboarded onto the platform. And then our agreement with them is by uploading these needs to the platform, you're validating that not only is this person real and this need is real, but it's a need of last resort, which I think gets to one of the other questions I saw in the chat, which is how do you sort of partner with other organizations and so forth. And so one of the other benefits of sourcing needs through these nonprofit partners is they know their communities. So they know when they can direct this person to that resource or that resource. And so they can sort of validate when this is sort of a need of last resort. And so we rely on them to do that vetting process and then to distribute the cash. And so we make that direct cash transfer to them within 14 days, usually less. And then they disseminate it to the household in whatever way works best for their model. Some will do a direct cash transfer. Others will pay the bill directly. We often see that in the case of domestic violence support, for example, where an abuser often has control of the financial mechanisms. So you can sort of circumvent that by paying the bill directly. So we sort of leave it up to their discretion on how they ultimately disseminate the cash. But again, ultimately, to underscore, we're subscribing to direct cash assistance principles, and our goal is to make this as low barrier as possible to both the organization and the neighbor in need. And so once that nonprofit partner who is sourcing and vetting those needs is onboarded, as little red tape as possible.
Yeah. I think we have more questions than we have time left to answer, which is a great sign. If you look in the chat, you'll see the contact information for all of the panelists. So if for whatever reason we don't get to your question, please follow up directly. And we will do our best to circulate, that information as best we can. Some of this is just come to the Financial Health Network website. We have information on all this stuff. And it's a wealth of resources, particularly folks that have questions about small dollar credit, the impact of fees on families' life. Our annual spend report looks at the breakdown of who's paying interest and fees, how that's spread out, what products they're utilizing. So a wealth of information for folks. They're interested in small dollar credit, other liquidity solutions that have a credit component. One question left for you, Rachel, is how does Canary's model maybe differ from other employee assistance funds?
Yeah, so prior to launching Canary, I spent about 3 years doing research and consulting with employee assistance funds. So that's how I came to this idea and even knew that it was a thing. And there's some terrific work being done by others. But fundamentally, we are a tech-forward company in a way that none of the other providers are. So we're available on when an individual has a crisis and they're applying for help with one of our programs, they can do it on their mobile phone, they can do it on a computer, they can do it however they need to in any language. It takes about 20 minutes. And because we are thinking hard about how to make the user experience as smooth and easy as possible, we know we have the best user experience on the market. So we worked with some behavioral design experts at Duke early on to make sure we were really thinking about what is the right level of friction. And so probably related to that, but also just a separate commitment we've made is to be the fastest on the market. So we know that emergency assistance funds often can take 2 to 3 weeks to get somebody the money that they need. We respond to every application within 2 days. We are just the fastest, pure and simple. And I think we're also doing a lot more on data than anybody else is doing, because we know that fundamentally we're trying to create a positive behavioral reinforcement loop of like, can we provide data back to the company that makes them feel ecstatic about having put money towards this? And can we use that data to get smarter and smarter in our own underwriting to make it an easier and better process for people over time? So it's really about, technology, user experience, data that differentiates our service. And as a related point, because of that, we are able to serve much smaller employers than some of the existing solutions on the market. So the largest employer we are working with is a few 100,000 people. Smallest is 100. And that's given how many workers in the US work for small firms, that's critical to making this a ubiquitous part of the financial health infrastructure.
Yeah. I think that part about size very bit. I mean, we see 40% of the population works for a small business, and they often live in benefit deserts where they don't have access to these solutions. And so these can be critical lifelines even for smaller organizations who need that. Had another question here that came in that I want to get folks, and this is probably the last question we can take live before we wrap up, but it's a sign of a good webinar and outstanding panelists and moderation when you have more questions than time. So this is not the end of the conversation. This is just a step in that conversation. But, this, I think, Rachel, you, or maybe it was Kelly, had mentioned this sort of broader financial aid model, combination of grants, liquidity solutions, loans, et cetera. Is this a new concept? And who's doing it well?
The portfolio approach, is that the question? Is that the new concept?
Yeah, or also this idea of we need to provide, other than, solutions with a range, grants, loans, savings. I have my perspective, but I wanted to ask you first.
Yeah, I want to hear your answer, actually. You should definitely answer this one too. I don't think it's a new idea. I don't think anybody is doing it. I think it's really hard. And from a provider's perspective, I can see why it's hard in a way that like I didn't quite get when I was a thought leader saying this is what you should do. But operationally, it can be hard. But it's the right answer.
Yeah, Kelly, what's your thoughts?
I see people doing it well locally. I was just visiting our new partners in Boston last week and was on the ground in Chelsea, Massachusetts with an organization called La Collaborativa. And the way that they're doing case management and the portfolio approach is unbelievable. But I think what we see is it's often happening in those smaller pockets that, again, I would sort of tend to agree with Rachel. I haven't seen at scale, at least, a really strong example of that approach.
Yeah. What I would say is it's not a new concept, at least in a workplace context, but I think the tools available are fairly new. So in the olden days, it was you could take a loan from your retirement plan, you could get a payroll advance, you go to the supervisor, ask to get, there are lots of mechanisms. I think what we're seeing now, and I think COVID really accelerated and exacerbated this, is we had a more unprecedented view into people's lives. And I think folks saw the need for thinking about bringing new and innovative approaches and mechanisms to reach particularly workers who were vulnerable. And especially given all of the chatter that employers have long had about wanting to protect the investments that are made in a retirement plan and not wanting to go to those unless absolutely necessary. I think that's how some of this got started, but I think COVID really accelerated it because we just saw for the first time in perhaps ever, employers could see into someone's life, literally into their life, and could see that they were housing insecure or that they had 3 kids running around like I do. You've probably seen a few of them bouncing around in the background here. So to me, this is really an evolution of recognizing this has always been a challenge, but the solutions coming to market are new and different and can also protect the investment employers are making and some of their existing more long-term solutions that they provide.
Yeah, if I could add one quick point, I think that to connect the dots of some of what you're saying, like I think part of the challenge is the case management is really hard, right? So I'm not surprised that locally in small places people can do it because the hard thing is identifying that we have this portfolio of things and you as an individual need this 5 and you as an individual need this other 4. And that steering is hard. And so what I've seen in the employer context is employers exploded the kinds of benefits that they were offering, but then that increases the challenge of the directive, the direction, right? But now, like we're getting to a point where we can see how technology and user experience will make that easier and easier.
Yeah, and I know there was questions in the platform about AI and the ability to do those things. I think that's exactly the direction that we're seeing employers leaning into, that I think consumers are hopeful about. I think there's a lot of work to do on AI. I think we've got a long way to go before we're there, but I think that's huge opportunities. I want to thank everyone for joining. I want to thank Kelly and Rachel for your wisdom, your passion, and your impact on the lives of so many people. I want to thank Ali and the Mass Mutual Foundation for their generosity and support for hosting these conversations and being champions of financial health. Our contact information is in the chat. So also, we're not hard to find. We like to talk to people. It's our job to do that. So please reach out if you have any follow-up questions or if there's information you're looking for. We are happy to do this. And last but not least, we host our annual financial health conference every year. And this year, it's going to be June 3rd through the 5th, 2025 in San Diego. I will spare you the Ron Burgundy jokes, but you can make them when you join us in San Diego next year. For those who've never attended this conference, it is a celebration of the financial health movement. It is insightful. You will laugh, you will cry, you will make a lot of new connections, and really encourage everyone who's interested in these topics and many others to join the movement and to join the Financial Health Network next year in San Diego. Thank you, everyone. Appreciate your time and look forward to continuing the conversation.
Thank you. Thank you so much.
Thanks, everybody.